stock analysis, and today we'll be looking into Meta. So I haven't covered the company in a fairly long time, and I figured, similar to how I just did with Amazon, it's time to do an update on how the company's doing. Go over their recent financials, look at their last earnings report, and just see really how they've been performing over the past couple months. So, saying that, make sure to subscribe if you're interested, and let's get into Meta. So, everybody knows what Meta is: family of apps, Facebook, Instagram, WhatsApp, all those good applications. So, really, I'm just going to look into the financials for today. So, net ads, I don't know exactly what this will specifically pertain to, but that's basically how many additional customers or possibly users. It's most likely users for them they add per year. So last year it was 160 million. In 2025, they're expecting 80 million. Average revenue per user is expected to increase a ton, which is actually very surprising. Monthly active users is also again expected to go up. Daily active, same thing. Family daily active people. I don't know what this means. I'm assuming it is the entire family of apps, possibly. But daily active users will be at 3.4 billion people, which is insane to think about. So, anyway, moving on, market cap is currently at $1.5 trillion, a very small dividend yield of 0.3%, which I believe they just announced last year for the dividend, which is fantastic, honestly, that they're actually having one now. I think it's probably only going to be a couple years until Amazon, which I just covered, will have their own as well. They're just not really there yet. Current target price is sitting at $762, and the long-term growth rate is at 12%. Right now we're at 626, so we are significantly below that target price, so could be a pretty good time to buy, possibly. One thing to look at is the growth summary. So aggressively positive across the board, very consistent with basically everything. I mean, just all the numbers here are very good. That's all I can really say. They're very good. Um, Not too much more to say there. So anyway, moving on, we will get into their earnings, and hopefully we'll get some fairly good information about their last report. Let's go with this first, and then we could look at the metrics after. So okay, very very small management comments from the big man Mark Zuckerberg himself. Continue to make good progress on AI, glasses, and social media. I'm excited to see these efforts scale further in 2025. So, operational and other financial highlights. Daily active people was 3.35 billion, 5% increase year over year. Ad impressions increased 6% and 11% year over year, which is also, again, really solid. Average price paid per ad increased by 14% and 10%. Revenue was 48 billion and 164. Oh, for the quarter. Okay. So full year, 164 billion, 22% year over year increase. That is fantastic. Total costs, whatever, increase of 5% and 8% compared to revenue increases of 21% and 22% are fantastic. That is excellent. Share repurchases of our Class A common stock were nil for the quarter. Oh, okay. Nothing for the quarter, and $29 billion total for the year, which is insane. I I need to double check that because that's crazy. Let's look at the cash flow and see what it says. Is that really wow? 30 billion total changing capital stock invested in repurchasing their own stock. That is crazy. So honestly, they probably own so much of their own company just based on how big the numbers are here. I had no idea they were reinvesting that much into the company. But anyway, moving on, that's just a massively impressive number. Um, Whatever long-term debt was at 28 billion, headcount was 70,000, 10% increase year over year. That is one thing I do always like to look at is the total headcount of the company. So a lot of companies cut their workforce fairly often, and I always feel like that is a not great thing. Um, will it actually load for me? Here we go. So Meta, I don't remember why I have these circles here, but just ignore that. Meta has been shaken around with their workforce in the recent past. So 2023, the full year, they actually cut by 22%. Now it looks like they're increasing their workforce again. Um, I believe the cut originally here was because of the sort of initial reaction to the whole metaverse thing, and they saw a pretty big downturn, a huge amount of costs sunk into that. And just in order to show investors that they were kind of making a lot of changes, they probably did that in order to regain some confidence. Now they're increasing their workforce again, and they're at 74,000 roughly people, which is, again, insane to think about. Why that many people for a company that's primarily just apps is unknown to me, but that is an impressive workforce no matter what. So CFO has some outlook as well, basically just reflecting on similar growth to what we already read over. We expect our full year tax rate to be 12 to 15%. Okay. Yeah, basically a lot of the same thing. So anyway, let's get into the financials now, starting off with the income statement, and we'll see how they've been doing. So really solid sales growth every single year, other than pandemic era. We did see a little bit of a stutter in their sales growth, but overall nothing too crazy, especially considering now they've improved so much. um, Net income, you can see their overall profitability has just been blowing up along with it. So them and Amazon have just been doing fantastic in the past 2 years, enormous record profits, which is pretty good for them. Looking at the total shares, you can see it has been fairly quickly dropping every single year, really highlighting those major share repurchases that they do basically every year, which is really cool. Honestly, they've repurchased almost 300 million. I believe it is in millions. Yeah, almost 300 million shares in the past roughly 10 years. So pretty solid there. Anyway, let's keep moving through onto the balance sheet now. So total cash is at 78 billion at the moment, with their overall assets at 276 billion. Massive increase from the past 2 years, adding almost 100 billion in total assets since 2022. Debt is at 49 billion total, so very, very coverable with their current cash. And also their equity is at 182 billion. So realistically, their ratio here is probably only going to be like 22, 23%, which is super manageable for any company. Looks really good. So anyway, on to the cash flows now. Operating cash flow is again massively increasing over the past 2 years. We are seeing some investments being purchased, about almost $10 billion worth of investments purchased in the past year. Acquisitions are fairly small, but they do consistently do some kind of activity in that realm every single year, but not a ton of real purchases going on. But to be fair, all of these numbers are in billions, so $270 million in acquisitions is something to be um, considered, but still, compared to everything else, it's fairly low. First year of dividends where they paid back $5 billion to investors, which is awesome. Again, we are looking at those stock repurchases that they've been doing. That is, once again, insane amounts of money going into repurchasing the stock. And you could see they really ramped it up back in 2021 when the stock price was dropping. Or actually, that was 2022. Let's see, 2022, the numbers were, even still, 21 and 22, they repurchased so much stock, and now their returns on that are probably insane. Anyway, debt issuance has been 3 years increasing, which isn't great, but again, they're also repurchasing so much of their stock that taking out the debt isn't really too terrible. But either way, why wouldn't they just reduce their stock purchases instead of taking out debt? I don't know. But either way, it doesn't matter because their free cash flow is massively positive. So no matter what, they're still doing an excellent job of maintaining their cash flow. So either way, it's fine. um, Ratios, we are should be seeing a lot of improvement year over year. So gross margin went up just about 1%, operating margin increased by about 5%, net margin increased by about 8%, actually maybe 9%. So huge improvements in the past 2 years. Once again, really just impressive improvements in the stock across the board. And once again, similar, very similar to Amazon, it shows directly in the stock price. So this is why I always highlight these financials because when companies are performing better with their margins, with their sales growth, it almost always translates into the stock price. Which I mean is like one of the most basic principles of investing. But when a company does better, the stock does better, which is why it's one of the main things I focus on with my own investing. That's why I push it so hard. But the results speak for themselves, especially with companies like Meta. So, anyway, moving on. I think that's all I wanted to go through. The last thing I'll just talk about is everybody watching this subscribing, and that's about it. So, thanks so much for watching. I'll see everybody in the next video.